Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, we had some great news. Inflation came out. We're down to 3% on inflation. What's this doing? Well, it's sending the markets higher. Dow's up about 150, Nasdaq's up about 130. Well, this 3% inflation print came out. We were at 9%. We're down to 3%. Now, obviously, the Federal Reserve shops at a different Costco than I shop at. When I go to Costco, there is no way that we have 3% inflation, but that's what they're telling us, so we'll go with that. All right. So the markets have had this big, long run up, right? We've had this big, long run up, and it's still strong. The bulls are still in charge. We come down, test the 20-day, and we bounce right off it, heading higher, heading higher. Bulls are still in charge, but where are we exactly? Well, we're right about where we were 2 years ago. Now, if you went to sleep for those 2 years and you just woke up, well, the market would be in about the same place it was 2 years ago. Now, I still believe that this is very overbought. I think there's extreme greed in the marketplace right now, which means there's a lot of risk out there. I'd be very careful if you were in the market. All right, so now where am I in? I'm in dry powder. Dry powder, I think there's going to be a lot better opportunities. Yes, I have a lot of the metals. I have the gold, the silver, but I have a lot of dry powder for the opportunities that are coming. Now, the HYG, which is the junk bonds are screaming higher. Now, that's really, really unusual to me. Who's buying the junk bonds? Well, I think we both have a good guess as to who that is, but there's liquidity being pumped into this market still. This market is not quite ready to roll over yet. I think it's going to happen. I think it's very soon. I think we will see it roll over. That's just my take. Your take may be a moon boy. Maybe you think it's going straight up from here. It's a possibility, I suppose. Maybe we'll get to new highs. Time will tell. We'll see how that all plays out. All right, let's get over to the real estate market. Now, the real estate market, we had great news there also. Great news. Here's the headline. Home prices hit a new record high in May. They hit a new record high. We're at a new record high in the month of May. That's what Black Knight's telling us. Now, Black Knight came out with their numbers and they figured it out that we've hit a new record high. Well, how high are we above a year ago? Well, a year ago, they're saying that we are up 1/10 of 1%. We're 1/10 of 1% higher than we were a year ago. Really? Okay, maybe we are, maybe we're not. But what that means is that the market was flat for the year. Now, Redfin has us down about 3% for the year. Zillow has us down about 2%. But Black Knight somehow has us up 1/10 of 1%. And this is getting the Moon Boys excited, right? They think the market has reignited. We're going to go higher from here. But really, even if you take their numbers, we've been flat for most of the year. Now, they said that in May, the biggest gain comes right where I live, right in San Jose, California. Had the biggest price jump since April. From April to May, went up 1%. 1% from April to May. Very interesting. Okay, so they got the record high for May. We flat on the year, though. Now, what does it mean that we're flat on the year? Well, if you're flat on the year, you got a lot of people upset. Okay, so the people who are waiting to buy, they're waiting for the market to come down, but it's not coming down yet. Now, the people that bought in the last year, they're not that happy either. Look, they could have not bought and just rented, right? Okay, let's say you bought I'll throw a number out there, an $800,000 house, right? And let's say your mortgage payment's about $5,000. Okay, well, you could have rented this same place for about $2,800. So instead of paying $5,000 a year, you could have paid $2,800, and you would have been better off because you would have taken your 20% down payment and put it into a CD that's earning 4 or 5%, right? Okay, so you're much worse off if you had bought this year. Okay, if you bought this year, you're already worse off because you could have rented rented, saved all that money, and made all that money on your down payment because the market's been flat. Well, we stayed flat for 5 years. Oh, you're not going to be very happy if you just bought, because you could rent for about 30 to 50% cheaper in just about any neighborhood across the country. Okay, so it's cheaper right now to rent than it is to buy. But okay, let's say something happened in your life. Let's say you got job relocation. Oh crap, I got to sell my house. Well, you don't have to sell your house. There's 3 things you could do. You could just keep it and hold it vacant. You could make it a rental, right? Right. Or you could sell it. Okay. So those are basically your options. But you're sitting there thinking, well, it's going to cost me about 8% to sell it. That's the fees to get out. Yeah, that's about right. But I only put 5% down. Oh, that's not good. That's not good. That means you got to bring money to the table. You got to bring some more money on top of your 5% down payment. You got to bring some more money just to get out of the property. So what are people doing? They're already walking away from properties. They're already walking away. What's the bank saying? Bank saying, hey, wait a minute. Come back. Come back. Don't go. Don't go. Don't give us the keys. Don't give us the keys back. Come back. We want you to stay. Let's rearrange your loan. Let's make it, you got a 30-year, let's make it a 40-year. Oh, you can't afford those payments? Let's put you on a moratorium. We'll put you on a moratorium, kind of like a forbearance where you don't have to make any payments for the year, and we'll just tack it on at the end of the loan. No, people are walking away, but the bank's going to come back. Come back. Somebody's got to be the bag holder. Who's going to be the bag holder if it's not you? Somebody's got to hold the bag, right? So if you bought this year, you're really not happy. There's 63% of people that have a lot of buyer's remorse for buying their house. They agree it's a mistake and they're already starting to walk away. Well, I want to take a look today at a couple of things. Let's look at the investor. Now, the investors are starting to lose money. I know that sounds weird, right? Investors losing money. Well, let's take Starwood Properties. Starwood Properties is selling 2,000 homes. They own about 3,200 homes. And out of those 3,200 homes, they're selling 2,000 of them. Why? Well, the smart money gets out first. They see the writing on the wall. They're taking their money and running. Look, at the rental market is good when house prices are going like this. But if they're flat or even starting to come down, that's a really bad market. And out of the top 50 markets in the United States, about half of them are still coming down. They're down year over year, about half of them. Now, some of them eked out a small gain. Of course, your area, it went up. Of course it did. It only goes up. But investors, they own about 17 million single-family homes. They own about 6 million units in duplexes and things like that. But they want to get out of this market. Now, a lot of these Airbnb people, I feel sorry for the Airbnb people. They bought their house, right? They bought 4 or 5 of them because that's what the courses tell you to do. Get leverage, buy 4 or 5 homes, and then you can rent them out by the day. You can kind of run like your own little hotel. Well, what's happening, a lot of the neighborhoods are saying, hey, we don't want short-term rentals anymore. We don't want that party house in the middle of the neighborhood. Look, there was just another shooting at one of these party houses the other day. The Airbnb, they're starting to close them down. So what are the Airbnb people doing? Well, they're either selling them or they're converting them to long-term rentals. The problem is the long-term rentals are not getting the rents high enough, so they're starting to lose money. So they're starting to dump these properties onto the marketplace. Do you realize that there were subdivisions, whole subdivisions built that were going to become rental units? Problem. They can't get them rented. They can't get them rented. They're not even putting them on the market. There's what's called shadow inventory. Shadow inventory is sitting out there. Look, at 1 out of every 10 homes in the United States is sitting vacant. Why? Because it's called shadow inventory. They don't want to dump them onto the market in the rental market because the rents will come down. They don't want to dump them on the market in the housing market because the houses will come down. Look, there's a lot of inventory out there that's not being accounted for. You can drive certain neighborhoods and you can spot these rental properties, these vacant properties, soon to be rental properties, or soon to be come onto the market. But these investors, they want to get out. These Airbnb people, they want to get out. Why? Because they see the writing on the wall. Now, look at it. People get upset when I say houses are going to come down 40 or 50%. All I'm saying is they're going to revert back to the mean. What does reverting back to the mean mean? Well, let's think about the stock market, right? Okay, so the S&P's trading right up here around the 4,500, just a little below that. Well, where's the 200-day moving average? It's down here around 3,900. So when it reverts back to the mean, reverts back to normal, reverts back to the long-term moving average, sometimes it overshoots to the downside. But if houses are to revert back to the mean, they'd have to come down about 40% right here. And we always revert back to the mean. Now, what do I mean by this? Okay, so let's take a look at houses. All right. So let's take a look at the average house. I'm just using a rough number. Let's use 400,000. All right, let's take a look at the average income. Once again, a rough number. Let's use 50 grand. All right. So the average income to the price of a house, okay, right now is about 8 times. $50,000 times 8 equals 400,000, right? So it's about 8 times. Well, normal is about 4 or 5 times. So it would have to come down about 40 or 50% to get back to normal. Now, that's just one ratio. There's a lot of these ratios that you can tell that we're in this inflated bubble, that unaffordability is everywhere. Nobody can afford a home. Nobody can afford the prices that homes are selling at. Now, there's another ratio. Let's go with this one. Okay, the average single family home, and this one, it's a little under 400,000. Let's use $375,000 for the average price home in the United States. Okay, what is the average price home in the United States rent for? The average rent is about $1,800 on a single family residence, about $1,800. All right, so you take that 1,800 number, multiply it by 12, because there's 12 months in the year, and you come up with about $22,000. $22,000 for rent is what people are paying on the average single-family home. Okay, now stay with me here. Right now, to get that 22,000 times something to equal 375,000. What is that number? Well, times 16 times would be about 350. So about 17 times will get you to about 375. 17 times the price of a yearly annual rent. What's normal? About 11. 10 or 11 is normal. So once again, these are just numbers, and but when they revert back to the mean, when they revert back to normal, they would have to come down about 40 or 50%. But Mike, it's different this time. Things are never going to be normal again. We had a pandemic. Everybody's got this extra money. They can afford their rent. They can afford to buy houses at these high prices. Nothing's ever going to revert back to normal. Well, and I like that. A lot of young people think things never go back down. Things only go up. I love the Moon Boys. The Moon Boys were going to double from here. Everybody get in and buy a house because they're going to double. I love the Moon Boys. I see them in my comments. They get all excited. Look at Mike. We just made a new record high for May. We're up 0.1%. Hurry up and buy a house, everybody. This is your last chance. We're going to run out of houses. Look at the shadow inventories out there. The forced selling is going to be coming onto the marketplace. This is just how it works. It's just normal, right? We've way overshot the mean, and when we come back down, we'll probably overshoot to the downside. But that really scares people, because then we would drop a lot more than 40 or 50%. And they say, Mike, that's impossible. You're crazy. You're out there in left field. You don't know what you're talking about. Look, I've been around the block once or twice. I'm an old guy. I've seen this play out before. I mean, you don't have to go back that far. Go back to 2008. Came down 34%. Would have came down a lot farther. Would have come down to 50%. But no, they went the other way. They printed trillions of dollars. 22 trillion to be exact. That's just since 2008. And they're going to try to do that again. I just think that's going to be like pushing on a string this time. They're not going to be able to make this market stay up. Now, granted, this is the good time right now. You can get out at a price close to what Billy Bob sold at. Now, people think that I want the whole market to crash. That could not be farther from the truth. I would like to see it double from here. I make money in real estate. I own real estate. I own my principal residence. I'm one of those baby boomers that have all of my money sitting in my house. If I were a smart baby boomer, I would be selling that house, taking the money out, going enjoying Billy Bob down on the beach in Mexico and just waiting for this to play out. That's if I were a smart baby boomer. I'm not smart like Billy Bob. Billy Bob, he took his money. He got out. He's waiting for it to play out. He's waiting to see what's going to happen. That's my advice for a lot of people. No, that's just my advice. You got to do what you want to do. If you want to go out and buy a house, I'm more than happy to sell you one. That's my job. I like selling houses. It's what I do. So anyways, if you want to buy one, why not? But I don't think it's a smart move right now. Matter of fact, I think this is a terrible, terrible time to be out there buying a house. You got prices that are still up back at 21 prices. You got interest rates that are at 23 prices. Interest rates have doubled. They've over doubled. And they probably will even triple. I really think mortgage rates are going to get up to 10%. I know a lot of you think that's impossible, but I believe that's what's going to happen. We'll see what's impossible. My inflation numbers came out. We're at 3%. The Fed's going to start cutting really soon. I don't see it that way. I don't see it that way. I think the Fed's going to keep raising. I think that the mortgage rate's going to hit 10%. I mean, if you have bad credit, you're already paying over 8%. So anyways, that's just my take for the day. If you like this stuff, give me the thumbs up. Why not? Hey, it's Wednesday, everybody. Get out there. Have a great day. I'm Tall Mike. We'll talk again soon. Hit that subscribe button. Oh, yeah, I want to thank everybody. Thank you all. Over 3,000 subscribers. Very exciting, very exciting. Get out there. Have a great day. Bye-bye now.